Today I have an update with regards to a company called Genus Power Infrastructure Limited. This is a company that is dealing in. One second, I will give you some more information. It's a company dealing in smart meters, like the electrical digital meters that we have in our electricity boxes. So It has a 30,000 crore order book. It's a small cap company, smart meter stock engaged in manufacturing smart metering solutions, executing power infrastructure projects, and providing advanced metering services for utilities and energy distribution. Company order stands 2.5 times market cap, reflecting 152% more than its current value. Market cap of almost 12,000 crores, a high of 393. This is as of Friday, which is down by 1.6% from the previous close of almost 400. The stock has given in the last 5 years 2,105% return. The stock is currently trading below 19% from its 52-week high of 485 rupees. As of March 31st, the company order book stands at 30,110 crores, providing strong long-term visibility with contracts spread across multiple SPVs and GIC platform. The company expects to realize around 55 to 60% of the order book revenue in the next 3 years, with the remainder over 8 to 10-year period. With the new tender activity has slowed down, the company anticipates it will pick up soon, especially in the states of Tamil Nadu, Telangana, Kerala, Karnataka, West Bengal. Currently, tenders worth 27,300 crores are open for bidding and expected to be awarded within next 3-4 months. Order book stands. We've been through this capacity expansion. The company installed capacity 1.5 million meters in Q4, demonstrating strong operational performance for FY26 as it aims to install 7 to 8 million meters, reflecting ambitious growth plans. The company manufacturing capacity increased to 15 million meters per year by the end of FY25 from about 10 million at the end of FY24. During the FY25, the company invested around 150 crores in capacity expansion, automation, and developing in-house software to support this growth. Guidance for company targets at about 4,000 crores, marking an approximate 60% year-on-year growth. It expects an EBITDA margin of 18%, with management considers conservative. Company plans to expand margins through backward integration in software and manufacturing, forward integration with end-to-end AMSIP solutions, achieving scale benefits and maintaining strong cost discipline. In established in 1992, is a leading company in metering solutions and trunky C services. It manufactures smart meters, net meters, and advanced metering infrastructure AMI systems serving both domestic and international markets with 27% market share. Genius Power is one of the top leading players in the smart metering space, known for its innovation and reliability, operating modern manufacturing R&D centers and units, corporate offices across Jaipur, Haridwar, Uttarakhand, and Guwahati, Assam. Clients serves a diverse range of clients, including major energy firms, public sector enterprises, state electricity boards. Its notable customers include Tata Power, NTPC, NDPL, UPPCL, Reliance Energy, Torrent Energy, and Power Grid Corporation. Infrastructure revenue has increased from 420 crores to 937 crores. So, just one quarter comparison between F4 and FY25. Uh, Revenue more than doubled, so 123% revenue growth. Net profit has also grown from 31 crores to 129 crores, a jump of 300%, which is very good, amazing performance, I can say. Genus Power Infrastructure Limited's revenue net profit has grown at about 52% and 125% in the last 3 years. Returns and stuff, we'll go through that in a bit. All investment opinions and recommendations mentioned are solely those of experts, broking houses, and rating agencies. These do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions made based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. Uh, okay, that was the logo of the company. We'll go through some information. So this is 1% up today, uh, minus 5% in the last 5 days. 13.6% value add in the last 1 month, overall negative of 10.5% in the last 6 months. In the last 1 year, 21% positive return, which is decent amount. We've been through the basics. Current price 377, high of 486. Price to earnings of 39 is on the very high side. Book value is 60 rupees, so the company is trading at about 6 times, 6.2 times its book value. Dividend yield is 0.15%. Return on equity is 17%. Return on capital employed is 19%. Face value is 1 rupee. Company has delivered 25% good profit growth over the last 5 years. Company has a low return on equity of 10.2% in the last 3 years. Promoters have pledged 66% of their shares. Company has high debtor days of 204, and promoter holding has decreased by about 11% in the last 3 years. Overall, you can see sales has grown by 55% in the last 1 quarter. The net profit has nearly doubled in the last quarter, which is a positive sign and which should be the growth driver for the company in terms of price and value add. Then overall, you can see in the last 1 year, revenue has doubled, which is an amazing sign, and the profit has multiplied times 4. So from 75 crores to 300 crores is a very good achievement. You can see sales growth 12 months is 103%, profit growth is nearly 290%, stock price growth is 15%, and return on equity 17% has been the best in the last 10 years. So gradually it's improving its return on equity in the last 3 to 4 years, which is a good sign. You can see reserves have grown by about 290 crores, which is a positive sign here. Borrowings have drastically increased, which means higher interest payments and leading to an impact in the overall bottom line or the overall financial results. However, if the borrowings justify substantial amount of profit growth as it has shown in the last 1 year, then the borrowings are justified. However, just need to keep a track that margins do not take a hit. If the margins take a hit, then these extra borrowing costs would negatively turn down into probably losses, or maybe not achieving the required amount of profitability as planned, or as you know as at, as envisioned, maybe you can say another term. So you can see here debtor days have gone up by about 12% from 176 to 204. Inventory days have reduced by about 10%, 11%, which is a good sign. Days payable have also reduced down by about 20%, which again is a good sign. That means the company is able to manage its assets in a better way, which is a good sign. Cash conversion cycle has gone up, probably because of inventory being held in stock, which could be the only reason why inventory and the debtor days that have gone up, which should cause the cash conversion cycle to go up. Working capital days remain more or less the same. Return on capital employed has improved from 10% to 19% and from 6% to 19% in the last 2 years. Promoter holding is 39%, out of which 66% have been pledged. Foreign institutional investors 22%, which is a high stake. Public is 34%. DIs is 3.78%. So overall, high public holding and high foreign institutional investors holding can definitely lead to volatility in stock price and in volume. It can easily find itself in the oversold zone if there's any negative sentiment that comes across the industry. From the current standpoint, with such a high order value book, there are high chances that there would be possibility of growth in the company, which would drive the price of the stock further up. And if the company is able to uh, improve on the revenue and profit margins over the next 2 3 quarters, then definitely you will see the stock adding 30 to 35% value within the next 6 to 8 months. So keep that as a part of your radar and ensure that you consult a financial stock broker so that they could give you the in-depth and expert advice before making any investment in this stock. So thank you for watching, friends. Wish you a happy week ahead, and we'll connect with another video tomorrow. Please share this video with your friends, family, and associates so that they could benefit from this information. And also, please share your feedback in terms of improving the content and the presentation of this video. Thank you.